Welcome back to Rand on Real Estate. My name is Greg Rand, and this is 77 WABC and WABCRadio.com. The calls are starting to come in, and just like I was hoping, I'm getting asked about a place I've never been to before, never heard of before. So we're going to test out my prowess talking to Jeff from East Brunswick. How you doing, Jeff?
Good. How are you? It's great to talk to you today. Happy Sunday.
Thanks. You too. Thanks for calling. So tell us about the market that you're thinking about.
Well, it's a sell and a buy, obviously. I'm looking to sell in East Brunswick, New Jersey, and buy in Monument, Colorado, which is a drop north of Colorado Springs.
Okay, good. Yep, I was just doing some research on that. I had not heard of Monument, Colorado, and so this was a good test here to see if I could use the tools and learn about a market. Now, I know a lot about Colorado Springs, and I know a lot about Denver, and so I'm sort of halfway there.
Okay, sounds good.
How far down? Because I mean, this is like on the state line with Arizona and Utah, right?
Not really. It's pretty much kind of sort of center. Like I said, a little bit north of the Springs. So you can see Pikes Peak from there. It's right off I-25.
Okay, so it's north of the Springs. Okay, I gotcha. All right, so tell me when you talk about Monument, that whole market out there. What's interesting about Denver, Colorado Springs, and Monument is that I'm looking at the home values. I use Zillow.com to run home value charts, so that I can. Right. Very first thing I want to know is what is happening there, and then I'll try to figure out why. But the first question is what. And when I run this chart, I can see that over the last 10 years, an average house in Monument, actually it's pretty expensive out there. It's about $300,000, and it peaked at about almost $400,000. Now it's come back down to about $330,000. So right. It's a fairly expensive market compared to Colorado Springs or other parts of Denver, isn't it?
Yeah, it's a little bit more expensive up there. Absolutely. Homes are a little bit bigger, they're a little bit nicer, a little bit newer. Okay, so you've got the same quality of life draw there. You're at the foothills of the mountains, and so it's fresh air and an outdoor lifestyle and so forth, but Monument is more of a luxury market in that area, you're telling me. Yeah, a little bit.
Now,
it's also right off the Air Force base, which may be impacting the market as well there. Yeah,
well, that'll do that. Air Force bases, especially when you've got, the whole NORAD infrastructure there that is in Colorado Springs, but there's a large military presence in that area. And from an investment standpoint, I like places that have military bases because military people get moved around a lot, and They don't all live on base. And so they wind up basically wanting to raise their families in a house, but they're not always going to buy a house. They're going to wind up renting one because they don't know, it could be 2-3 years. They're back off to another base someplace else. And so those places, those kinds of markets usually support investment in a very big way just because of the very high-quality renter base that is always shifting around.
Mm-hmm.
Now, what, from the standpoint of, are you looking to buy there to invest or are you looking to buy there to move?
No, buy there to move. To
move. Okay, good. Now, what's drawing you? Are you just getting tired of paying New York, New Jersey taxes, and you're looking to go someplace more cost-effective? What's going on?
Well, that's absolutely part of it. But there's some, life changes and such. So I figured, let's move across the country.
I'll tell you one of the things that, I was driving from Colorado Springs to Denver about 4 or 5 months ago, and I stopped along the way to get gas, and maybe it was in Monument. One of the things that, as we analyze these markets, look at numbers, look at job growth, look at migration patterns, it's all about trying to forecast demand for housing. If population is growing in a place,
right,
then you want to know why. And if the reasons why are sustainable, well, then you can open up shop there because people want to live indoors, right? So if population is going to grow, then therefore demand for housing is also going to grow, which will support prices. It'll support rentals if you decide you wanted to invest in property to rent it out. And what it always lands on, you go from all this hard stuff of prices and demographics and migration growth and everything else. But you know where it lands? It lands on, are the people happy there? It lands on the soft stuff. Are the people happy there? And what I get when I go to Colorado is the people who are usually miserable in life are actually happy when they're in Colorado, meaning the TSA agents who scan me as I go through the airport are nice in Denver airport. It's striking, okay? They're usually miserable no matter where you go, but they're nice in Denver. Why? The guy behind the counter at the Quickie Mart, when I went to get gas and buy a soda at 11 o'clock at night, I got to tell you, sometimes around here, man, they don't even look you in the eyes. They kind of toss your change at you, and there's no smile. This guy was, how you doing, mister? Have a great day, mister. It was what strikes me about it, and I dug in a little deeper, and this is probably one of the things drawing you out there. when people are happy, people are nice. And so when you see people that are nice, overwhelmingly everywhere you look, they're nice. That means they're happy. And something about a place like that part of Colorado, that part of the country, that literally is only it only got developed in the last 50 years. So virtually everybody who lives there chose to move there. And when you choose to leave one place and go to another, I think there's an empowering aspect of a decision like that. I'm sure you could speak to that because you're doing it yourself right now.
Sure, absolutely.
So I like it. And, your timing's not bad because the home prices here in New Jersey have not taken the kind of hit they have in Colorado. So you're gonna take a tiny little beating over here because you're selling at a bit of a low point over the last 5 years. But you're delivering a bigger beating over there when you buy. You're going to get a better deal percentage-wise just because of the fact that the market over there did take a bigger hit than it did around here.
Yeah, and I was looking at the tax basis also, and it's incredibly different. I'm paying like $12,000 a year taxes here, and for Morehouse, it's like $3,000 over there.
Yeah, it's funny. I'm glad you mentioned that. When I was out there, the reason I was in Colorado Springs is I was doing a seminar for a big client of mine out there for their customers, and we were doing some case studies, actual properties that were on the market that I was showing them how to analyze, and I asked them what the taxes were, and they said $1,300. So I said, okay, 1,300 times 12 equals, and they said, why are you multiplying it by 12? I said, well, I need to use the annual numbers. They said, that is the annual numbers. To which I said, well, $1,300 a year, you guys must not have paved roads, right? You don't have cops and firemen out there, I guess, because how could you possibly have all those services? And they laughed at me. They said, no, you just, New York has just got a little bit hog wild on the taxes. But, yeah, it's true, man. The kind of money you can save when you get out of the big population centers on taxes is amazing.
Oh, yeah, it's absolutely incredible. And no Jersey Turnpike tolls either.
Exactly right. All right, well, listen, Jeff, I appreciate the call. Good luck with your move. I hope it all works out well.